I will present about business nature of the company. We choose two companies that are Barry Callebaut and Hershey. Background about Barry Callebaut was founded by Charles Barry, found in Hundercow, France in 1842. The company began producing product in 1911. Then, in June 2013, the company is now have a largest manufacturer. So about Hershey company is founded by Milton S. Hershey. The company found in Lancaster Caramel Company in Lancaster, Pennsylvania. 1894, Milton S. Hershey started a chocolate company. Business was so successful that in 1903, Hershey started work on a new factory in Derry Township, Pennsylvania.
I will present about my part, which is liquidity ratio using horizontal and vertical analysis for both company. As shown in the slide of horizontal analysis, the current ratio for those 3 years is instability due to the occurrence of fluctuations. It shows that Barry has the potential to meet the short-term obligation because it was not below 1 for those 3 years, while for the quick ratios, it shows there has a fluctuation which indicate that it has the difficulty to meeting the current obligation. However, low values do not indicate a critical problem if Barry company has good long-term prospect on the future. Then for the net working capital, it shows a continuous improvement where this position is ideal because the operation farm are acquired smoothly due to good asset turnover and stock reduction. As shown as the slide, for the current ratio, Hershey's company is not well run because it can seem that this company didn't have the potential to reach the targeted goals such as cover its short-term debt because the finance are quite not strong enough, which is the year 2017 and 2018 are below 1. While for the quick ratio, in year 2017 shows the lack of ability for Hershey's company to having the cash equivalents, but it increased drastically in 2018 by 0.89 and there was a decline again in 2019. From this view, it shows there have been fluctuation over those 3 years. This means it has unstable financial turnover in order to pay the liabilities in the short term. Then for the net working capital, the Hershey company has a volatile value which indicate that this position is not ideal because it has a negative range and fluctuations. The operation fund could not be acquired smoothly due to lack of asset turnover and stock reduction. So now we go to the liquidity ratios using vertical analysis for both company because vertical analysis is an accounting tool to make an easier ways to understand about the correlation between single items on a balance sheet and the bottom line which expressed in shape of percentage. It shows the differentiation ratio of both firms in order to see relative changes in company accounts over a given period of time. As you can see at the slide, it was the comparison for the Hershey's company and Barry Callebaut. So that's all from me. Thank you.
And today I want to present about average collection period, account receivable, turnover, and fixed asset turnover. Average collection period means it's a amount of business received payment. The company calculate the total to ensure cash on hand. In horizontally, based on table, Barry Callebaut has higher collection than Hershey since 2017. In vertical view for average collection, Hershey has lower than Barry Callebaut. The Hershey should compare to the last year to know it will increase or decrease. Account receivable turnover, the ratio of the number of time accumulated over the course of years, determining company efficiency in expanding credit and accumulating debt. Horizontally, Hershey turnover in our years then Barry Callebaut. In vertical side view, Hershey receivable high liquidly compared to Barry Callebaut for 3 years. Fixed asset turnover is ratio an indicator for business managed to fixed asset to receive, multiplying net profit by net value like company's land, factory, and machinery. Horizontally, Hershey turnover for 3 years, but Barry Caliber generated high in 2017 and 2019. In vertical side view for fixed asset, Barry Caliber lower than HERSHEY.
Asset turnover. From the graph, we can see the HERSHEY company get more than Berry company. To analyze this total asset turnover, I use sales divide total sales formula. So from the graph, we can see the HERSHEY company get in 2017 1.05, 2018 1.01, 2019 0.98. Berry company 2017 0.08. 2018 0.09 and 2019 0.09. Debt ratio. To get the debt ratio, I use formula total debt divide total assets. The HERSHEY company get in 2017 0.83, 2018 0.82, 2019 0.79. Berry company 2017 0.31. But in 2018 and 2019, they get the same total, which is 0.36. Debt to equity. To get debt to equity, I use formula total debt divide equity. So the HERSHEY company gain in 2017 is 4.96. In 2018, 4.47. 2019. 3.67 and Berry company in 2017 0.46, 2018 0.55, 2019 0.47, less than the HERSHEY company.
I will present about gross profit margin. For the gross profit margin for the HERSHEY company for 2017 is 0.46 and 2018 0.46. For 2019 it decreased to 0.45. For Berry Caliber for gross profit margin for 2017 is 0.57 and 2018 0.56. For 2019 is 0.51. It's decreased for 2 years. Generally, the highest gross profit margin is better, as highest gross profit margin is mean that the company did well in managing its cost of sale. Okay, for operating profit margin for the HERSHEY company for 2017 is 0.17, increased to 0.21 in 2018. For 2019 it decreased to 0.20. For the Berry Caliber 2017 is 0.27, 2018 is 0.28, and for 2019 decreased to 0.23. Okay, from this table, both company operating profit margin still indicative of how will it's managed, because operating expenses such as a salary and rent and equipment less variable costs rather than fixed expenses. Okay, for the net profit margin for the HERSHEY company for 2017 0.1, for 2018 0.15, and for 2019 is 0.14. For Berry Caliber net profit margin 2017 is 0.17, for 2018 is 0.17, and decreased to 0.15 in 2019. However, highest net profit margin indicate more profitable companies that have better control over the cost.
So I will analyze our 13 analysis ratio, that is a return on asset of a Berry CALLEBAUT and HERSHEY company in 2017 until 2019. The purpose is to measure the rate of return earned on the total asset investment of the firms that result from operating income. It shows that the higher the numbers, the greater the return earned for the firm operation. According to the graph, the return on asset of a Barry Callebaut was a decrease from 2017 until 2019. That was a 6.54% in 2017 to 6.32% in 2018 and 4.79% in 2019. Meanwhile, for the return on asset of the HERSHEY company was fluctuated in 2017 until 2019, where there was a 40.1% in 2017, was a rise up to 15.29% in 2018, and dropped in 2019, that was a 40.12%. It showed that the both company had problematic in manage the asset, but they still can generate a profit from their operation. To conclude, by using vertical analysis, the HERSHEY company had a better performance and manage their asset to generate income compared to a Barry Callebaut company. The last but not least, I will analyze the return on equity ratio. The purpose of using this analysis is to measure the rate of return earned on the stockholder equity investment in the firms. Therefore, the higher the number, the greater the return earned for the firm stockholders. As shown in the graph bar, the return on equity of a Barry Callebaut or company was recorded the decreased percentage in 2017 until 2019. That was 16.81% to the 16.30% in 2018, and the lowest percentage was in 2019. That was 12.91%. While the return on equity for HERSHEY company also declined from 2018 until 2019. That was recorded as 84.05% in 2017 to 83.68% and 65.89% in 2019. It showed that the company had a worse performance in 2019, whether it's dropped every year, but the both companies still can generate their profit from their equity. As shown in the graph bar, it showed that the HERSHEY company has had the better performance in managing their equity to generate income compared to Barry Callebaut company. Every year, the return on equity for HERSHEY company always lead to the return on equity of the Barry Callebaut company. That's all from me. Thank you.
For the recommendation and conclusion, it can be concluded that Barry company shows a better financial performance from the year 2017-2019 due to good asset turnover and stock reductions. As for the HERSHEY companies, their overperformance is unstable when they start with a negative net worth in 2017 and then increasing in 2018, but then decreasing again in 2019. For the recommendation, there are 3 recommendations for the both companies in order to keep sustainable when the world are affected by the COVID-19 right now. The first suggestion for both companies are to identify changes in consumer behavior during the pandemic and act on them. And for the second suggestion, they should continue shifting from shopping in store to online shopping, for example, Amazon, Shopee or Lazada. And for the last recommendation, they need to optimize the production costs by prioritize on the products that have highest demand and those driving the most profit.